Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for June 30, 2020. Today, taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis. On the left-hand side is the daily time frame, looking at the candlesticks, and we can see the blue shaded area right in the lower portion of the chart. 0.95159525 is holding resistance and has been for several days. Let's actually zoom in on that a little bit. You can see that a little bit better. So there it is, the blue shaded area, 95.2515, holding as resistance for the past several days, a couple of weeks now. And here we are again, challenging it as resistance. And as long as it stays underneath there, it provides a potential opportunity to trade in the direction of the trend. The trend has been down. And so if we're going to trade the direction of the overall trend, the blue shaded area provides that opportunity and has been for the past week, week and a half or so as an opportunity to short at the blue shaded area. The risk is pretty easy to figure out. We just don't want it to get back above that blue shaded area. So if you're trying to figure out where to place your stop loss, that's where you're going to do it. You're going to do it probably above today's high as your stop loss. That way, if the market decides to change the pattern of the downtrend and turn into an uptrend, then you can minimize the impact to your trading account. So selling into the blue zone becomes at least the current theme for the dollar franc today. We could target back down to the yellow zone, which is 94.90, 94.75. Beyond there, the purple zone becomes a pretty decent target. That sits down there into 94.45, 94.30. And of course, the ultimate low down there, the orange shaded area, sits at 94.05, 93.90. So now let's take that information down to the 4-hour time frame, and we can see what's happening here on the 4-hour time frame is clearly finding resistance after yesterday's significant rise from the purple shaded area all the way back up here to the blue zone. We can see finding resistance over the past several hours. So again, it really is telling us that the buyers are having a difficult time getting through there. If we're going to have an opportunity to go short, this is where we're going to look for it to happen, similar to what happened over here on the left-hand side. Now, of course, if the buyers stay in control, it breaks through the blue zone, that becomes a different story for us. So we're focusing in on the blue zone and a possible opportunity. If we look to the right-hand side, the volume indicator on the right-hand side, we've already seen two short signals here from the blue zone for the dollar franc. Right here is one where the volume indicator rolled over from green to red, and we saw the first little tick down from that area, maybe about 8-9 pips as it turned lower. If you stayed with it, maybe you saw it push about 20 to 25 pips on the way back down. Second short signal happening not too long ago. Remember, this is the 5-minute time frame. So we see it changing over to red here, and again pushing back down, showing that the sellers are interested. It pushed down about 15 to 20 pips on that push. And now once again we see the market pushing back up and challenging back on the green zone. So this little push back into or towards the blue zone is giving us an opportunity now to look for a new rollover, a new changeover to red, just like what happened when it went from green to red right here, where it went from white to red. We're looking for that opportunity now for it to find resistance at the blue zone and turn around again and go back down towards the yellow zone. And again, we already know what the risk is. The risk is, and stop loss will be above the blue shaded area. So I'm watching for the fresh short signal from the blue shaded area. If you want to be a little bit more aggressive with it, you could possibly just go ahead and take the short here at the blue zone. We already know what the risk is. It's not very long, just from the bottom of the blue zone to that red line is only about 21 pips or so. So if you put a 20 to 25 pip stop loss, should be safe if it's going to turn around and go back down. And of course, if it breaks above the blue zone, you don't want to stay with it anyway. Now, again, if you're on the long side of this, I would say that you probably want to break that blue zone before you make that trade, because it's had a difficult time in the past several days breaking that blue zone. So buyers, if you're going to be on that side of this, you're looking at the yellow zone or above the blue zone for a buy scenario. Until that happens, short scenarios from the blue zone are a possibility for the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.